15 on a Monday morning, 5th day of August 2019. Glad to have you along. And this is our slot for the CWTAR presentation of the Voice for Real Estate. Brent Ward is our host each week. Good morning, sir.
Good morning, Jimmy. How are you this morning?
I'm doing fine. You're all decked out in your lime green, ready to rock and roll this morning.
Found this hanging in my closet. Forgot I even owned it this morning.
I find a lot of stuff in my closet, but it don't fit anymore.
Well, that's funny. I used to couldn't wear this shirt. Now I can wear this shirt.
Oh, those are the good ones.
Yeah, those are the good kind. So I'm having to go to another area of my closet I haven't been to in a while to find stuff that fits a little better than the other stuff used to.
I know exactly what you're talking about. We're going to talk about real estate for the next few minutes and some related items. I was looking this morning on the stock updates. The 10-year Treasury is down to 1.76%, the lowest I've seen it in quite some time. And we'll talk about this with our guests from Leaders Mortgages about if that has affected long-term interest rates yet, and if it will, and how so.
That's right. Yep, we sure will. And I'll leave that up to an expert more so than myself. Because, that's one of those funny things that when you're getting your license, they talk to you how do you pre-qualify people and all that kind of good stuff. But then once you actually get your license, then all of a sudden you discover there's more people out there that's actually better at that type of stuff than you are. And so instead of trying to do stuff to get yourself in trouble, it's much easier just to refer them to somebody else.
Go
to
to the expert.
That's right. Go to the expert. That's what we tell people all the time. There's definitely nothing wrong with doing that. So yes, we do have a special guest with us this morning. Leaders Mortgage Services is back with us, and we have Miss Liz Stewart with us this morning. Liz, how are you this morning?
Great, thanks for having me.
Oh, good. We appreciate you being here. If you saw our website, this is not Tim Sykes, so just FYI.
Yes, I know Tim well, I can guarantee you.
Yeah, my wife asked me before I left, she's like, who do you have coming on the show this morning? I was like, Tim Sykes with Leaders Mortgage Services, and she's oh, yeah, I saw that on Facebook because I didn't know it was out there. Kimberly handles all that. And so anyways, and then I got the email from Kay this morning saying, well, Tim's a little under the weather. Yep. So we have a good substitute coming in for him. So.
One thing I need to touch on before we get into that. Number one, check that switch on her mic if you would for me there, Brent. And Paul Schulze, our man behind the curtain back there. We called him the man with the hand. I think you got it now.
I get it?
Yeah.
We're good.
Paul's with Worthy Road Studios, owns and operates Worthy Road Studios, takes care of all of our social media, our Facebook and our Facebook Live broadcasts, which we are on right now on
That's right.
the CWTAR Facebook page. Paul, give us a hand out the door over there. Let us know you're up and running. There he is. He's hard at work. So
Thank you, Paul.
Another day, another quarter. Paul's probby shaking his head.
He probably is. Y'all can't see him, but I bet he's back there shaking his head up and down.
No, he's coming out.
Scoot to your left just a little bit.
There you go. We got to get everybody centered. The other left.
Yeah. Oh, yeah,
okay.
This right here.
There we
being
go.
blocked by
now we got it all set up.
That's
live
the bad
radio.
part about being on live radio and, Facebook Live and all that kind of good stuff. It changes up the whole dynamics.
It does. It does. Now, let's talk about real estate.
Yeah, let's talk a little bit about real estate. So I had some interesting topics I was talking about last week, and I bet you've heard of some of these, but I was talking about the iBuyer platform. You've ever heard of that?
I have not.
You have not? Really? You haven't?
About that far from your mouth.
Yeah.
There you go.
Yeah, so I'm not going to bring it up again, but that's an interesting platform that's getting a lot of press release out there that we don't have it in our market area, probably maybe why you haven't heard of it, but in a lot of the larger market areas, it's something that's being picked up, and it's just not what they're making it out to be because they're leaving out terms and words and stuff that they deem to be offensive, like commission. That's a word they like to leave out. So they replace it with another word that's exactly the same thing, but it just doesn't say commission, so it doesn't sound as bad, right?
Right.
Except for there's a lot more of them, and it's a lot more expensive. So we always tell everybody all the time that there's no reason why you can't go local to somebody in your market area and get the same thing. And I know you'll agree with me on this, that you can get online, right?
True.
And you're dealing with the same person, and you can see them face to face, just like we're sitting here right now.
That is correct.
So Leaders has been around for a long time. You guys are a sponsor of our show as well as being a big sponsor of CWTAR. And there's quite a few of you guys over there. And where are y'all located? Let's start off with that.
Well, we've got an office at Thompson Farms. We've got another office at 214 Orwell. That's next to Zaxby's. That's where I'm located.
Okay.
The mortgage office itself is over at 35 Stonebridge.
Okay.
And then we've got several other branches, out south on Highland and
Outside, are y'all located in any other?
We are in Bartlett, Tennessee.
Bartlett. Okay. All right. I didn't know where your arm met out there. If you had another branch out there somewhere that wasn't in the Jackson market area, so. Okay, so y'all kind of hit all of West Tennessee, but you're primarily located right here in the Jackson area.
Right,
okay.
and we actually do mortgages across the United States. We have that
Do you really?
capability, so
Okay.
we actually pick up some that are moving from the West Tennessee area and can do their homes.
Right, gotcha, and that makes sense. Yeah, so they're used to using you guys and going out that way. Sure, I understand that. All right, so just a question that pops up, because I know when I used to do real estate, one thing I used to tell everybody all the time is, always go, and a lot of people I dealt with, they actually use Leaders as their banking services, and I would always tell them, hey, make sure you check there first for your mortgage, and then if you want to shop someplace else, just to make sure everything matches up. So are there any advantages that maybe Leaders has over a bank, a traditional bank or another mortgage division that's out there or
Well,
something?
we have of course, our personnel.
Right, yeah, that's what
we're
you're dealing
amazing.
with. That's right, yeah. You guys are good.
And we've got several bank products, in-house bank products. We've got discounts because we're a credit union, so we have a little bit more flexibility.
I was wondering about that.
Right, and we're not for profit, so there are those abilities that we have that maybe some other banks do not have. Everything's done in-house. Our underwriters have been with us for a very long time.
That's a good positive.
So they're highly seasoned. It's we can offer the whole picture. We've got a variety of products, and of course, we like to keep our members in-house and do everything that we can for them. And
Sure.
we are local, so they can come in and sit down with us face to face. They don't have to do it over the phone or over the internet, and so that is a great ability that we have.
Now, you mentioned that, and I did too, because I'm a big use somebody local. I like the face-to-face, but I'm not going to lie and say that I like the convenience of being able to go online and look stuff up and find out some information with really having to pick up the phone and call somebody just to get what I consider to be useful information. So I'm going to guess, and I'm pretty sure you do, that you guys have a website as well too that people can come to.
We do. You can go to the Leaders site. We have a mortgage drop-down box where they can actually go there, fill out an application. It is assigned to a loan officer unless they pick a specific loan officer
Okay.
that possibly if their realtors, guided them to. And then it comes into our computer. We can pull credit, give the customer a call, and kind of cut out a little time for them, and make it a little convenient. They can fill it out at night,
Right.
the
Yep.
weekend, and but then they can come in and talk to us face to face if they choose to. Some it doesn't matter to them. Some they don't care to, come in and they're
That's
busy.
true. Yeah, and I agree with that. There's still those people out there, especially probably some of your younger crowd. But I'm seeing that's probably starting to change just a little bit. I think they're kind of getting into the habit where they kind of realize that it's easier to get a few things done if you can actually sit down and talk to somebody versus just everything being online. And you mentioned something that was important, so being able to do it at night. And I just remember when I used to do real estate there used to be statistics that NAR used to give out about when people were online and when people were checking, and that was one of the big factors, that there was more people online looking at houses at around 8 o'clock at night all the way up until like midnight. Like that was the biggest time people searched properties, was at night.
Right.
And so if they're searching properties and they're thinking about purchasing something, I would also think that would probably fall into the category of that might be when they would also hit up a mortgage company or anybody else that was involved in that real estate transaction. So it's good that you have that, because Jimmy and I have actually had this conversation before. I'll have to admit, local or not, if you don't have a website presence, I don't even use you. I just skip you and go into the next one I can find. And whether that's right or wrong, but it's just so important in today's world with your businesses. If they can't find you on the web, you're getting overlooked. You just are.
That's true. The web today is the old phone book.
That's exactly
and
what it
you don't
is.
get ink on your fingers.
That's right. That's right. You don't. You just get drawn into doing a lot of other stuff you
That's
wouldn't
true.
have done
Yeah.
otherwise.
Yeah, killing pop-ups.
Yeah, exactly. That, or you end up on Facebook and you're watching videos and people's posts and you're like, oh my gosh, it's been like 2 hours. I got to go.
I've got nothing done.
Got nothing done. All right, Kay. So, sorry, Kay. So you
Liz.
Kay, Liz. Sorry about that. Kay Carroll. I've known her forever. So, we talk about all the time about how mortgages fit into the real estate buying process. So when you're going through, and a lot of times I say that's either going to be step one or it's going to be step two. It just depends on how you get started and how you go to first. So what would you recommend that people should do if they're looking to purchase a property? You tell them to come to you first, or?
Most definitely. Usually realtors nowadays actually want their customers pre-qualified and won't even get them in the
They
car.
do. That's right.
So, and nobody wants to waste, including the member or, customer looking for a home. They don't want to waste time either. So we like them to come in, get pre-qualified, know what their options are on the different mortgage programs, give them a pre-approval letter at that point, and then the realtor of their choice, and then they get in, and feel comfortable and confident when they're out looking for a home.
Right. Yeah, and I can say from a realtor's standpoint, yes, we much prefer if somebody shows up to be pre-qualified. And even if they're not when they show up, we turn around and send them right back to somewhere to say, hey, we need to get you pre-qualified because we need to know before we get out there and start showing properties that you can actually buy this. And a lot of times, unfortunately, we'd find out that people are basing, without being pre-qualified, or basing what they can buy based on the amount of rent that they're currently making or paying, and that really has no bearing on how much house they can actually afford. Is that? Yeah,
that is correct. A lot of times they don't realize that they can afford more.
That's right.
Or they think that the payment of a house is way out of reach for them, and then when they get in front of a mortgage loan officer, they understand that they that is within their reach.
I would say right now probably that it would probably be, if credit scores were good, it'd probably be easier to buy a house, especially price wise, than it would be to rent, because rent right now is insanely high.
It is,
and it's hard to find something. I think that's the other key a lot of people are running into.
True.
Or at least something you can afford. Let's put it like that. Right. I think there's plenty of apartments out there. It's just how much can you pay?
Right, and very often, like you said, the house payment's going to be less with taxes and insurance than their actual.
Oh yeah,
and it's theirs.
We've lived in our house for my son's 11, so we've lived in our house probably 12, 13 years, and I can tell you right now, our house payment is way less than it would be for a 2-bedroom apartment somewhere, and we got a 1-acre lot and a 2,000 square foot house, and yeah, I have to take care of it, but still the money I'm saving, by not having to pay the rent, that could go into repairs easy. Mm-hmm. So if you're thinking about it or you're on the fence, you won't know until you make the phone call. So just word of advice, make the call, find out first before you lock yourself into something that you might wish you hadn't. So moving forward, you mentioned about different programs or what might fit them, and that's something that Jimmy and I have talked about before as well too, that it's not like it used to be a long time ago. I've been doing this for 22 years, and back when I got started, it was pretty easy to keep up with mortgage because there was like 3 or 4 products to choose from, and then that was it. You either qualified for this one, or this one, or you paid cash, which not a lot of people fall in that category. But that's not the way it is today. Today is totally different now. So explain to us a little bit, about some of the programs that might be out there. People, what are some of the differences?
Well, we've got the standard programs, the FHA, conventional, VA. We offer USDA and THDA, which are 2 grant programs that offer assistance in down payment, money for down payment or closing costs. They're based on income-based per household. We've also got the in-house mortgages that we do as well. We've got a physician's program, or medical personnel is what we call it, professional, which is up to 100% financing.
Wow. Yep.
With no MI, which is a,
MI, what does that stand for?
That's mortgage insurance.
Mortgage insurance. Okay.
Mm-hmm.
All right. Mortgage insurance.
And they're very competitive rates. We've got Home Advantage. We've got an equity line. Those are products that are second mortgages that you can use. We've got the HELOCs, or not the HELOCs, the home improvement loans.
Okay.
Leaders offers just a variety. Pretty much if you need it, we pretty much got it.
You pretty much have it. So you mentioned FHA. Most people, I think, are probably familiar with FHA. If you've even thought about buying a house, you've heard that term thrown out there. But you talked about USDA, and most people are probably sitting there going, isn't that the people that also look at meat? Am I not mistaken on that? That's correct, right? So you got USDA, but you also got THDA. So you mentioned those were grant programs, like, and they are income based, so it's all based on how much your income. But how does that work exactly? You got a grant coming in? Kind of how?
Well, USDA is 100% financing. It's kind of outside city limits.
Okay, so in the county. So be out in the
Yeah,
county.
you know, like Medina is in that three-way. There's a, you know, you'd be surprised at what they consider, you know, so-called rural.
Sure, yeah, right.
You know,
Not what we'd call it, right?
right. Interest rates are extremely good.
Okay.
You know, they look at the total household income, whether or not they're on the loan or not. So if you have a spouse that's not going to be on the loan, still have to consider their income.
Okay, yeah.
Anybody over 18, basically, that has an income coming in, whether they're on the mortgage. That allows you to do the 100% financing. Seller can pick up the closing cost, or if the house appraises for enough, you can actually roll your closing cost in. So it's truly a loan that you can get in for no money.
Right.
You
Okay.
know?
Now, THDA, what is that? Was USDA you were talking about,
That
right?
is correct.
Now, what about THDA?
THDA has a couple of grant programs in the Jackson area, 305 and 301. They had a $15,000 grant, which actually is almost out of money, so that's
they
going to
are.
go away.
I was just
So,
getting ready to ask you about
yeah,
that.
I've had a couple of calls on that over the weekend, and it you know, it's going away. They're almost out of money. They've got a great choice that's 5% of the sales price
Okay.
that you can put towards your down payment or closing costs.
Okay.
You can tie that with VA, conventional, or FHA, and seller can pay the closing costs on there. So that's another way to get into a home with little or no money. Interest rate on that program right now is 3.875, which is an excellent rate.
Okay. Mhm.
And you know, it's through the state, so it's
Okay.
anywhere in the state of Tennessee.
Okay. Yeah, that's that $15,000. My operations manager there in my office, she took advantage of that and was able to qualify for that.
That was a huge help
and
for
it
a lot
was
of
a
people.
huge help. And she probably would have never bought a house if it hadn't been for that particular program. And I just happened to meet with a lady that was explaining it to me before they actually rolled it out. And I just came back and was talking to her about it. So, and she used leaders, so she used when she did it, and it was a help for her. First house she's ever owned by herself. Her and her husband a long time ago had a house together, you know. But she's a single mom and still got a daughter in high school that she's trying to get through high school, and she has a granddaughter, and so she needed a house.
Right,
It was too
and
expensive
everybody
to find an
deserves a
apartment.
home,
And then
you
they
know,
do.
and that's what these programs are developed to hopefully be able to get as many people in homes, you know, that can be.
That's right. Yeah, and so it was a big advantage, but that was the key right there, and that's the thing that I try to get across to everybody all the time. And I used to do that when I was an agent, and I think all real estate agents, all realtors really try to do that. Is, you know, if you don't make the phone call and you don't try to find out if you even qualify, then you're just never going to know if you just automatically assume that you can't. Because in her particular case, if I hadn't come back and was telling her about it, she probably would have never picked up the phone and called anybody.
Right, and that's another thing too about using somebody local, because you know, people that go in through Rocket Mortgage, Quicken, those, they're not aware of the programs, and actually they don't really have access to these programs.
That's right, they don't.
and they won't do those. So you know, you could be really missing out by, you know, applying online with a company like that and miss out on some great benefits that you could have otherwise locally.
And I talked about this just a few weeks ago on the show. Was you know, I used to do referrals as a realtor. I used to get referrals from Quicken Loans, and most of them were, you know, pretty good referrals. I'm not going to, but when it was all over and done, very few of them actually ended up using Quicken Loans. Now I still had to pay a referral fee, which was fine. I didn't mind, but you know, I didn't purposely go out and make them switch. But in the process of just talking and carrying on conversations and stuff like that, because what I've talked about on the show, when you're using an online, and I'm going to pretty much say they all work this way. You start with one person, but then when you hit that next step, it goes to another person. Then when you hit to step 3, it goes to another person, and they got different people lined up all the way. And even though you're not doing the underwriting, you will still be with that person as their contact from the day you start all the way up until you've shaken their hand at the closing table.
Right. That is correct.
And that is such a huge thing, because if a problem or something comes up and you get into the panic mode and you're calling, and now you're talking to person number 4, and then you're having to re-explain everything that's going on. They don't know anything about the start or the past, and it may be something you've already told them about that just never made it, you know, to that person, and they don't know about it. Now then you got a problem, and you're having to call, and if you can call, because a lot of times they only want stuff done internet based, because
You can't
they
reach
want
them
that
after
paper trail.
hours.
That's right.
You know.
And they want that paper trail, so everything has to be done email wise, and so it just makes things much more difficult when you get into a situation like that. So speaking of situations and troubles and things that come up, I'm going to turn it over to Jimmy for a second. We're going to come back to that because we got some interesting stuff over here to talk about on that.
Scared me there for a minute. You said troubles and looked at me.
I know, yeah. You've probably seen that look before, though, right?
Every day, every day. We are blessed to be sponsored by 4 great sponsors here on the Voice for Real Estate. Obviously, one of those is Leaders Credit, and we appreciate Liz being with us this morning. Also, one of our sponsors, Allstate Insurance, Angie Hooten Hughes. We had Angie on a couple of weeks ago, and she has an office here and an office in Shelby County also, and they are the Allstate representative, one of the Allstate representatives here in the city. Not only can they help you with your homeowner's insurance when you're in the home buying business or if you already own your own home, but they also do every other phase of insurance you can think of, and they would love to sit down with you and look at what you have, tell you where you might make some changes, save a little money, bundle that product, and save you a lot of time and a lot of money. The best way to do that is to call them, let them look at what you've got, make those suggestions, and then carry it on from there. 668-1990 is the Jackson, Tennessee office. Give Angie Hooten Hughes a call at Allstate Insurance. And Pete Dubuisson, the owner-operator of National Property Inspections. The property inspection on a new home is an integral part of it now. Didn't used to be so much. People would use them occasionally. But now it's pretty much required in most cases that you have an inspection done. And they'll go in, they'll look at the house from top to bottom, check the plugs, check the heat and air, make sure the water's running uphill instead of down or downhill instead of up.
I was going to say, how many houses you been in there, Jim?
Well, I'm upside down most of the time anyway. But they do a much more thorough job than I can explain it,
there you
apparently.
go. See, look.
But Pete Dubuisson and his crew at National Property Inspections, they're the best in the business, and you'll get a written report. They'll tell you everything that needs to be addressed, whether it's good, bad, or indifferent, and you know exactly what you've got before you put your name on the dotted line, which will occur at an attorney's office in most cases.
Yep.
And one of those is Bird and Bird Attorneys. They've been doing the real estate law in this market since 1985. They do residential, commercial. They take care of the title searches, the title insurance, foreclosures. Should that ever have to be a part of your program on the back end? Hope you never have to use that, but they can do that for you. They do buy-sell agreements, commercial leases, and contracts. Charles Bird Sr. carefully reviews every transaction to make sure it is correct and right before you sign that note and that trust deed, and you're off with your new keys.
That's
Bird
right.
and Bird Attorneys, 424-7188. Our sponsors for the Voice of Real Estate, for Real Estate.
That's right. The Voice for Real Estate. That's
Yes.
right.
All right. Yeah. I
That
want
it?
to ask you one question, and I hope I'm not leading you down a path that I don't know the answer to, and you don't either. But credit obviously is a big part of what you do, and the way we look at credit now, back versus 40 years ago, when I was in the lending business, we used a local credit bureau. Now it's all computerized, nationalized, internationalized. When you come in and you get a customer and everything looks pretty good, except their credit rating is not quite what it should be to qualify for the kind of loan they would like to have. You see a lot of commercials now online, on television, about these websites where you can go to, and it appears that instantly you can take your credit from 600 to 785. Is that valid, or how do you, if you don't have a credit rating that will support what you want to do, what's the best way to get it up there in order for you to qualify them for a loan?
Well, there are a lot of companies out there that you have to pay.
Yeah.
That they want to fix your credit.
Exactly.
Leaders can pretty much tell you exactly what you need to do. We have a credit simulator. We pull through TransUnion, Equifax, and Experian. This simulator will tell us, pay this account down to this, and it should increase your score X amount.
Right.
A lot of lenders have that ability without having to pay somebody to
Exactly.
fix your credit, because that's usually why you're in the shape you are now, because you don't have the money to pay some of the accounts.
Exactly.
So yes, we do have that ability to be
Great.
able to do
Great.
that and tell them how to increase if we cannot, do the loan at that time. We also have a program that will notify us when their credit score has increased.
Wow. Yeah.
Enough to be able to purchase them, and we let them know that we'll be reaching out to them when we get the notification.
That's great.
It's rare that we actually lose people especially if they're face to face with it. They
Yeah.
will come back, and if they're leaders members, they know that what we say is what we will do.
That's great. So you don't have to go to an outside source. You've got that as part of your day-to-day service.
You do.
Yeah, excellent. Appreciate that.
Yeah, actually, that was a pretty good question. If you just tuned back in with us, I'm with Liz Stewart, and she was with Leaders Mortgage Services here in Jackson, one of our great sponsors here at the show, but not only at the show, but also at the Central West Tennessee Association of Realtors. And speaking of credit, it's amazing because what you just talked about is true. I was told a long, long time ago you should never have to pay somebody to help you with your credit, right? Because typically that's how you got in trouble in the first place,
That's
right?
correct.
And so, but it's amazing today how much, like you just said, mortgage lender can help you with your credit when you go in to talk to them about purchasing a property to get it up. And it's amazing the small little things that you can do. And that changes frequently as far as what they judge. Because I remember it wasn't too long ago, they were just like, well, if you had a bunch of credit cards and you weren't using them, but all those balances were hanging out there, that was money that you could use, that looked bad on your credit report. But that's different now.
It is.
Now then if you go and start closing out all these accounts, that drops your credit score down.
It does.
Right.
And it seems logical that if you're not using an account anymore and you don't want that temptation,
That's right.
close it out. But you're correct. It definitely drops your credit score to close out revolving accounts.
It does, because I know my wife and I have talked about that a long time, and I'll be the first one to tell you she's the one that always had the absolute great credit score. Hers was like up in the upper 800s, like 855, 860, something like that. Mine was nowhere close to that. And but she mentioned not too long ago, because we don't even use credit cards anymore, and so she's like, we got like 8 accounts, we need to close some of these things out. And I was like, well, maybe, but I said, we're not using them, just leave them. We track them, because I said apparently now these days that causes your credit
That's
score
bad,
to drop
yeah.
when you do that.
You're right.
And to clear up a lot of myth here on this, so if I'm out looking for a house and I come see you, now naturally you're going to have to do something to go in to look at my credit report, but that's not like going to just drop it down when you pull it, because you're not pulling a full-blown. Tell me how that works, because I don't know that I've ever really understood exactly how that works.
Well, I mean, what we do have a soft pull.
Okay, soft pull.
Which does not hit your credit score. We actually have a mobile app that will allow you to complete a few points of key information. We don't even have to have your social security number. It's done by association with your legal name, your address, your date of birth. And it's a soft pull. Doesn't hurt your credit score at all, so you can kind of see where you're at.
Okay.
We can get a copy of that once that is done and kind of assist off of what we see, if your credit scores, but at least you'll know. You can also get, through our mobile app, you can actually get a pre-approval. As long as your information is in there correctly, you can get a pre-approval.
Are that soft pull, those scores are fairly accurate? Or?
Yes, they are.
Okay. All right. I have no idea. I knew there was a way you could do something, because I have people that used to mention to me all the time, well, I don't want to go see a mortgage person yet because I haven't found a house that I want yet, and I don't want my credit score to drop. And I would try to explain, well, yeah, but that's not going to really affect your credit when they go in to do it. Now,
Right. We're unlike a credit card or an automobile, which will.
Yes, that's a good lead-in right into what I was getting ready to talk about. So we're talking about how the mortgage fits into the process. So that's either step 1, preferably, but a lot of times it could be step 2, depending on whether you go see a realtor first or you come to the mortgage first. But always in the beginning, and then it's something you're going to deal with from start all the way to the finish when you get to the closing table. But there can be some pitfalls in there somewhere, and a lot of these sometimes fall upon the seller, and they end up in their hands to where they've done something that has actually caused a problem. Even though they started out great here, now then we're getting close to closing. And this may be always the case, but do they always come back and pull another credit?
You do, but we're required about 10 days out of closing
Okay.
to do a soft pull to see if anything's changed.
Okay.
If they've got any new accounts, any new inquiries, and then we have to address those prior to closing. If there's any new debt, we're going to have to verify that and have that put on your credit report, and it's going to affect your ratios.
So let's talk about some of those things real quick, because I know what I used to tell my clients, and I'm not going to mention it. So we're going to let you talk about it, and then I'll chime in if you don't hit on anything that I talk about. But talk about some of those things that would affect that. Like what type of things would do that? If you're a buyer and you're scooching along and you're doing pretty good, and your credit's not like bad, but it's not super great either. So you're in a nice kind of comfortable zone there. But then all of a sudden, so what are some of those things that would do that?
We have on occasions we have somebody that'll come in to purchase a home, and they go buy a car. They'll replace a car traded in, and they don't think anything about that. With my my clients, I always tell them, don't buy anything. Don't start transferring money. Don't, make crazy deposits, because we have to track all of that stuff.
Right.
So don't do anything during this process. We see people that will also co-sign for a child or a family member thinking, I'm just a co-signer. That is not you are on that loan, and that loan will be counted against you. Unless you can prove for a year that somebody else has been making that payment and their name is on that account, and you're not just co-signed and they're nowhere on that.
Gotcha.
So,
Okay. Yeah, and I've heard that in the past, that even though co-signer sounds like it's pretty innocent and it's not a big deal, you're basically just another person on the loan,
Absolutely.
co-signer or not. Your name's on there just like theirs is. So if they stop paying and you're not paying either, guess what? You're both going down for that.
that is true.
I mean, it's kind of the way that it works. So yeah, one of the big things that we used to run into all the time, especially with new home buyers, because they're so excited about getting ready to purchase their first home, and it's a normal thing to do, is to go to a furniture store and go look at furniture, because you're a new home buyer. You might have furniture for an apartment, but you don't have a furniture for an entire house.
And
appliances, that's true. Because most houses these days don't come with refrigerators, at least in our market area. And some market areas, they don't come with dishwashers or stoves either, but that's another topic for another day. So they'll go out to a furniture store and they'll start looking at furniture, and sure enough, they're going to get hit when they walk through the front door by a salesperson, and nothing against that. That's their job. But inevitably, they'll end up going ahead and applying while they're there, but not buy anything, right, until after the house closes. But that doesn't really change the fact that they just changed their credit score when they did that.
Right. And they have to prove that they did or did not open an account. They can't just say, I didn't open an account. At that point, they need to prove that there is no balance on that.
Wow, that'd be kind of difficult to prove that I didn't actually open an account. They pulled my credit, but I didn't open an account.
I didn't do that.
Yeah, I didn't do that. Yeah. So the car buying new furniture, buying appliances, and that was kind of the rule of thumb. Don't do anything that's going to change your credit score. Don't open any new credit cards. Don't go buy anything. Don't trade anything. Never thought about the whole cosigner thing, but that's true. If you've got older kids or a family member or something, be careful with that as well too. And the other thing too is don't change jobs in the middle of this, because. And I don't know that a lot of people realize that just because it started down this road based on this information, if you change jobs and it gets better, that's great, but that could change the whole process, even if your job was better, because your other job might have had 5, 6, 7 years worth of background to go along with it. Now you just changed to a new job. That's surely got to have some sort of effect on
It does, because you could be, we could be qualifying you with overtime, that you've had a 2-year history at your previous job. You go to another job, you don't know if that is same amount is going to be available at that job. We can't use that because it's a new job.
And there's no verification. You don't have any history.
We don't have any history, so we don't know that it's going to be similar or more than that other job. It could be a totally different line of work. Some loans, if you change jobs and hadn't been on there a year and it's a different line of work, USDA is for one, they won't do it. They won't do the loan. They used to, but they've changed their guidelines, so you can't do that.
While we're on that topic, is there a certain period of time that you're kind of looking for people to have a new job? Seems like a long time ago. It used to be like 2 years, but I don't know if it's the same.
Well, we still look at the 2-year history, but we also look at the number of jobs that you've had in that 2 years, because that's considered stability as well.
Correct. Yes, I understand that.
Some jobs have a probationary period.
Okay.
FHA, you get a new job. We're going to ask that employer state whether or not you're on a probationary period, because there's a good chance that if you're not doing what you're supposed to, they have the option to let you go.
To let you go with no repercussions. Yeah, that's understandable. Yeah, I try to do that in the office. Never works out very well, but whatever. All right, so those are some others. Anything else we can think of? I'm trying to think of anything else that might crop up that would cause you to, the loss of a job. Even if it's a spouse that maybe you weren't even considering, but they're still considered, even if, So yeah, that's another thing. So the loss of a job, that would be one. Trying to think if there's anything else I can think of on there. Anything else you can think of that you've run into?
Well, some things that we run into, or I have run into, is transferring money back and forth to accounts. We have to track all of that, and source it, as we call it. People save money at home to buy a house, and then all of a sudden there's this large cash deposit. We can't prove where it came from. Back, several years ago, that wasn't an issue. it is an issue
It
now.
is an issue
You know,
now.
you have to have either sold something and prove that you sold it by a bill of sale. We have to track that money. It all has to be sourced. So, you know, we see that some as well.
Yeah, that's interesting you mentioned that, and I know a lot of people, especially in today, probably never really think about people like honestly keeping money on them. But I actually had a friend of mine who had a family member that used to carry like a ton of money on them all the time because they just would not they wouldn't let them direct deposit their check because they didn't, it was an older person, because they didn't trust that it would make it to the bank. And so they would just go cash it, and they didn't have any expenses. So most of that, I mean, like 90% of that money was always with them all the time. And, you know, after many conversations and a lot of convincing, I finally convinced them that they needed to put it, you know, in the bank. The problem is you just can't walk down to the bank and hand them a cash deposit of 60 grand and for them to say, you know, where'd it come from? You know, so I found we had to do it this way. They got a safety deposit box and transferred it, put all the cash in the safety deposit box. And every month they had to go down and make a $2,000 payment for a little over a couple of years, because I don't know what the numbers are, but I figured 2,000 was probably a safe number.
Yeah, and a lot of times, you know, they have really good intentions. They don't feel like they're disciplined enough to
Yeah.
put that in a savings account or checking and not touch it.
Right.
So, you know, so they'll keep it at home, and you know, there's two people's, you know, spouse maybe to watch that money is going to stay there, and they're held accountable.
Yeah.
So, you know, and it seems innocent, and it seems logical that you could use that money. It's your money,
Yeah.
you know.
It is your money. That's
You
true.
would think cash is cash any way
Yeah,
you
you
do
would
it,
think
but
cash is
it's
good,
not
but-
anymore.
Yeah, right.
Not unless you're paying the entire full price, but even then you can't walk into a closing with a shoebox with $120,000 in it and buy a house. It doesn't work
doesn't
that
work
way.
that way.
It has to come through
Yep.
the bank or some sort of source that's in there. And another thing I tell you on that, we're getting run out of time here.
Yep.
I saw on TV the other day about a guy that kept like $23,000 in cash or whatever,
Yeah.
and by mistake he got the shoebox he kept it in into his recycling stuff, and actually it went out. And by the time he realized that it had gone out, it had already gone through the recycling system and was on
man.
its way. So they put feelers out there. This was in another state somewhere, but they put feelers out there to everybody to be on the lookout for this shoebox.
Right.
He described it. Anyways, they got the shoebox back, and he got almost all of his money back. He
That's
didn't get it
amazing.
all, but he got almost all of it back.
That's
He was very lucky.
Yeah, he was lucky
Very
that he
lucky.
did.
Very
So we
lucky.
are out of time over here, but real quick, this is Liz Stewart with us this morning from Leaders Mortgage Services. And Liz, how can they get in touch with you?
My mobile phone number is the best way to reach me because I have it with me 24 hours a day, and that's going to be 901-233-8021. And I'm
Okay.
also located at the Leaders branch next to Zaxby's.
Okay. Well, Liz, I certainly appreciate you showing up this morning and talking with us from Leaders. And with that being said, Jimmy, I guess we'll
All
turn
right.
it back over to you.
We'll do it again next week about the same time on the Voice for Real Estate, a presentation of CWTAR, the Central West Tennessee Association of Realtors, and sponsored by Leaders Mortgage Services, Allstate Insurance, Pete Dubuisson with National Property Inspections, and Bird Attorneys. And thanks to Paul Schulze and Worthy Road Studios for making our Facebook Live possible. We'll see you next week.
I'm John Scott.